How's it going, everyone? Brian Hoops here with Midwest Market Solutions, Market Insider TV closing commentary. It is Tuesday, September the 4th. If you're not a normal or regular follower here on Market Insider TV, we do this twice a day, morning and afternoon, early evening, talking about the markets and marketing. And we take a look at some charts, fundamentals, everything that's going on in the markets. And we certainly want you to subscribe at our website, MidwestMarketSolutions.com, so that you can receive these every time that we broadcast them and stay on top of what's going on, not only fundamentally, but also technically in the markets. We're looking first here at October cattle. I thought this was an interesting chart pattern. Here is the key resistance in here at 112.25. If we are able to get above it, we're going to take off and rally here. But let's look at what else's charts are telling us here. I think you can take this trend line, draw a trend line here on the October cattle, and you can see we broke below it just a few days ago, end of August, broke below it, and we've been trading below it, but we're starting to move back above the uptrend. But look at what stopped our rally today from a technical standpoint. We came right up to another little downtrend line and pulled back off of that high. So you could flip to the December contract, and there's the same pattern here, an uptrend that we had broken, came back and closed back above it. Now we rallied up to this little downtrend line and couldn't get above it. So what happens going forward in here? Well, from a technical standpoint, if you can get above this downtrend line in either the October or the December and close above it, that's going to be technically friendly with resistance coming here and again here. And major technical support down at these lows that were charted near the end of August. So that's from a technical standpoint. From a fundamental standpoint, it certainly looks like cash cattle going to be a little firmer this week. I was on RFD TV earlier today talking about the outlook for cash markets, and we do expect that Packers have plenty of margin to work with. They losing a little bit of that, but are going to have to use some of it this week to buy cash at higher money as they try and fill up the kills going forward here in the next several weeks, as we'll have very large weekly kills through the end of September. You look quickly at the hog markets in here. October is a completely different view than what some of the February or June contracts are. This is October hovering near its contract lows because of soft cash, soft demand. But look at February in contrast. We have exceeded these rallies and continue to push higher in here. Our low was charted back here on August 9th, right about the time that we agreed to a new agreement with Mexico, and prices have rallied and put in a pretty large premium in here, anticipating we're going to have some additional export business to Mexico and to foreign buyers. So that is friendly for our longer term hog markets. Now let's look at some activity in the grains. Let's look first at November soybeans. This is almost a double bottom in here. We wrote about this in our weekly newsletter, how there was a double bottom, and at the same time the commercials are bullish. We rallied up to this resistance, 851, and kind of backed off. We're probably just going to go sideways with downtrend line resistance capping rally attempts. And if we take this low out, look for the market to drop to around the $8 mark, maybe just below that under some harvest pressure. Corn, I don't think you're going to see that harvest pressure. We couldn't get back down to this 352 area, which is a target we had to begin buying some contracts. Looks like we're still technically in a downtrend in here, so you don't want to get real bullish, but the commercials have turned bullish in the corn. And if you want to look at doing something, look at this July contract in here. I think you've got a little bit of a downtrend here. We may go challenge that, but also you've got a little bit of a triangle pattern developing where we've got downside technical support in here. We may go test this and pull back, but as long as we don't exceed these lows, I think we've probably got our lows put in here for a while in this July contract. And wheat doesn't know which way to go, higher, lower one day, up and down. We did find some support and bounce off of it, but 16-cent lower close, and you can see pretty strong downtrend market in here. You either have to take out this high here to say we reverse the trend, or you take out these lows and push this market lower here after a small little rally. So I don't think we're going to push higher unless we get a lot of support out of corn and soybeans. Too much world wheat and not enough of exportable price advantage for the U.S. in here. So I'm looking at probably lower prices. And if you look at the new crop, we were sellers up in this area. If we get back up into this 609 area, that's the next selling opportunity for winter wheat producers doing some hedging as the crop will be seeded here in a couple weeks. Have a great night, and reach out to us. Make sure you get signed up and review these videos each and every day. Have any questions, reach out to any of our offices. Brian Hoops from Midwest Markets.